Yo, what up, Hyperchange? Welcome to another episode. Today we are doing an earnings bonanza. A ton of tech earnings are out. So I'm going to give my thoughts on Square, Peloton, or actually not Square, they haven't reported yet, but I do have thoughts on them. Peloton, Spotify, Snap, Apple, Amazon. We're going to go through all of those earnings today. If you have questions, hit me in the chat. We already got one super chat. Thank you to Josh T. Gally, 3 quarters in a row of gap profit for Peloton, not in the S&P 500 yet. Yes, I think Peloton could be the S&P 500. Amazing company. I love Peloton. If you can give me a thumbs up if you can hear me. I got my new live stream set up. Got the same mic as Michael Jackson. My DSLR hooked up. So hopefully the quality and get into it. Welcome to Hypercharts. So this is Hypercharts. I want to make sure y'all can see me. Second. Who should we start with? We are on Hypercharts. All right, welcome to Hypercharts here. I'm setting up. I got all my screens. I'm broadcasting the show myself here. Pumped up for this live stream. I've had an epic day of content. So this is Hypercharts. You can go to hypercharts.co to follow along. I put the link in the description. And we are going to start out with, let's start out with Peloton because they're one of my favorite companies. Used to be a shareholder, not anymore a shareholder. Obviously a little bit salty about that. But Peloton has absolutely crushed it. I mean, this started out to me in the pandemic. Everyone's like, Peloton stock started skyrocketing. This is the 2-year chart. And we were like, wow, Peloton's killing it. Or I guess they IPO'd in mid 2019, so we can't even see the 2-year chart. But then they kind of had this dip. I bought Peloton around $22 here and sold it around $29. And then since the pandemic has unfolded, we've just seen that gyms have been closed. Everybody wants a Peloton to work out. The stock has absolutely skyrocketed 6 or 7x. I think that personally, Apple should have bought Peloton for $10 billion. That was my Moonshot Monday. Now Peloton's worth $40 billion, so it would have been a good move. But I think of this as the Apple of fitness. Think about what Peloton creates. They create these amazing products that I think are just like, hardware products that allow you to work out. They have the treadmill, they have the bike, but I think they're going to expand a ton of other stuff. And so they just reported earnings today. And what's interesting about Peloton, it's not just a hardware company, it's a software company as well. They have these really connected fitness subscribers, essentially people who pay to subscribe to their digital offerings, just like Netflix, but it's for workouts. I think this is fascinating. You don't even need a Peloton to sign up here for this SaaS subscription. And so their connected fitness subscribers were 1.7 million in the quarter, up huge from 1.3 million the quarter before. This is fiscal Q2. They're off a little bit, but 712 more than doubled to 1.7 million. So I think they added almost 1 million subscribers in the past year of connected fitness subscribers. I think this even costs more than Netflix, but I'm not sure. If we look at the revenue here from Peloton, the pandemic, it seems simple to know that Peloton would have blown up in the pandemic, but this has been absolutely insane. They used to have this seasonality in their business, which you can barely see, but it would spike in Q2 and Q3, then go down and this was around the holiday season for consumers. It would spike in fiscal Q2 and Q3, then go down. And then now it was spiking in fiscal Q2 and Q3, and there was no dip there. It just kept skyrocketing because of the pandemic. So they bucked their own seasonality trend. In fiscal Q1 there, look at that, 756 million in revenue last quarter. This quarter, they did 1.065 billion in revenue. So I still think Peloton is extremely cheap, honestly, compared to a lot of other companies. I think they're still misrepresented as a hardware play. This company, they look at their growth rate. $1 billion in revenue up from 460, over 100% growth, but they're only a 40 billion market cap. So we're looking at a company that's trading about 9 times sales, despite growing sales over 100%, having an amazing product, amazing CEO, amazing category. I think this is one of the highest quality companies in the stock market. And the reason why I'm making this video about all this, I own a little Snap and I own Spotify, but Peloton and Amazon and Apple, these are like my favorite. I guess Apple and Amazon are a little too big, but Peloton's like my favorite just kind of mid-cap tech play because I think they're such a high-quality growing business. And look at the, actually, let's dive here in the subscription revenue from the actual software side of the business. These are the subscribers. Here's the revenue for it. We're looking at 200 million, almost 195 million in software revenue. Exploding. up from 77 million. So even faster than overall revenue growth, and 200 million a quarter software business, almost $1 billion a year in software revenue. You could put a 30x multiple on that in this market condition. So I think Peloton is really this fascinating hybrid of physical products, still the bulk of the sales, but then this higher margin software revenue in red, combining for an incredibly profitable business model in the long term. So connected fitness products revenue, 870 million this quarter, up from 381 million, just absolutely a blowout quarter for them. Let's look at the income statement here. Wow, they've been profitable for 3 quarters in a row, 60 million in operating income, 1.065 billion in revenue. Look at the gross profit here. This is going to blend that profitability of the hardware revenue with the software. I mean, astronomical growth, 197 million up to 424 million. This is the number I'd be watching there. And then you look at, 424 million times 4, we're looking at 1.7, 1.8 times 1.8 billion gross profit run rate, 40 billion divided by 1.7. What are we looking at? 24x gross profit multiple with gross profit compounding at 120%. I mean, I think this is a really, I still think Peloton's misunderstood as a fad exercise play when it's really a pure software hardware play on the future of fitness. And, there's 8 billion humans on the planet. I think they all need to get fit. Let's look at what happened with margins. Operating margins here peaked at 15% in fiscal Q4. They're down a little bit, probably investing in growth. I didn't listen to the call, so I'm not sure. Down to 6%. So super profitable. We did see a dip in margins there. Maybe they're launching some new products, some new cheaper price stuff. But I think Peloton in the long run can maintain that 15 to 20% operating margin, maybe 25% operating margin. So you look at a business that on an annual basis, those are my old projections, but on an annual basis now is doing 4.2 billion in revenue times a 25% operating margin. You're already looking at a 1.3, 1.4 billion normalized earnings run rate based on the current revenue. And I think that's only about, yeah. And I'm like, wow, that's only, is that right? Yeah. I don't know. So I think Peloton looks cheap no matter how you slice it, but sorry if I confused you there with that. Let's look at the revenue growth rate here. Revenue growth at 232% last quarter, now down 128%. So this will be interesting because they'll start to hit these tougher comps going forward, and we'll see how the growth rate normalizes after COVID. I guess the big question, if I was looking at Peloton, would be, what happens after Corona? Does everybody go back to gyms? Do they see a sharp decline, or do they kind of flatten, or does this just continue because this is a better way to work out? I think that is a lot of the reason why Peloton looks cheaper than a lot of these plays, because they're pricing in, once Rona's done, kind of a decline in that business. I don't know if that's right or not. Okay, let's switch it up. Let's go to another stock here. I'm having a blast doing this. I hope y'all are as well. If you have any comments or anything like that, please let me know. Here is Spotify. So Spotify, we're looking at, I thought, an excellent quarter for Spotify. 45 million monthly active users there, up from 320 million. They added 25 million net monthly active users. We got 155 million premium subscribers, up from 144 million. This is the biggest bull case that I think Spotify has, is you're looking at 155 million people with their credit cards paying for this service, and the market cap's only $57 billion. You comp that at something like Netflix, which is worth so much more. I actually want to take you on a comparison of Spotify and Netflix. We can have some fun in compare mode here, because I just want to see kind of the multiples and the ratios. So this is revenue. Obviously a lot bigger is Netflix. Netflix average market cap last quarter, 224 billion. Spotify just 54 billion. So Spotify is like only 1/3 or quarter the size of Netflix. Gross profit multiple, this is interesting. They trade at pretty similar gross profit multiples. And I think they're growing at about similar pace of gross profit, but about 24x, it looks like 23x times gross profit. So pretty similar there. We can look at the revenue multiple. This is kind of my bullish reason for Spotify, is I think Spotify has a lot of room left to grow their revenue at a really fast pace. But yet they already traded a discount to Netflix, to me, who is bigger and more mature with less growth potential. Spotify has more, but trades at a cheaper revenue multiple, 6.8 versus 8.4. So I've always thought that was pretty interesting. I don't know if we can comp users. That would have been a good comp there. But anyway, that's just to show it. One thing I also wanted to do is Square and Spotify are in very similar territory valuation-wise, but I think Spotify And originally, if you didn't look at this quarter, like without this quarter, Spotify was really hurting in the blue. Spotify's gross profit, which used to be bigger than Square, but now Square's gross profit has grown way faster, especially because of Bitcoin and Cash App. And look at that, Square totally crushing Spotify in gross profit growth. So I was actually thinking about selling some of my Spotify stock for Square. I've been talking about that forever. I haven't done it yet. I just love both companies. But if I could sum up in one chart why I'm more bullish on Square than Spotify, it would be this gross profit growth. I also think a big thing going on under the hood with Spotify is foreign exchange. So they have this is a good tab for Hypercharts. You go to overview, and then I can go to investor relations. So they redirect me right to Spotify's official investor relations page. Here is the press release. Forex. So all their revenue is denominated in euros because Spotify is a Swedish company. So you're going to want to keep that in mind. But headwinds impacted revenue growth by 690 basis points. That means 7%. They would have grown 7% faster if it hadn't been for a declining and depreciating euro against the dollar mostly. So that's something really important to keep in mind when looking at Spotify's financials is it looks like their growth is slowing and they're not growing that fast, but then when you put back in those Forex things, it's going to look a little better. So the other thing I wanted to search for here is podcast content, because this is where they've really been pushing. They have Joe Rogan, podcast content, better than expected gross margin, acceleration of users who engage with podcast content. That's what they talked about here. Strong revenue growth in ad-supported revenue, which it looks like from, look at this. Let's actually just read this. They talk about the Joe Rogan experience. We saw healthy double-digit CPM gains along with contributions from The Ringer, the Joe Rogan experience, and the acquisition of Megaphone. And the new streaming ad insertion product, which I made a video on. It's a really cool new ad format, is now live. And our programmatic and direct channels increased 12 and 7%. So it looks like a really strong quarter for that ad-supported revenue because of podcasting, like free podcasting is there. And if we actually go to, we can go to Hypercharts here and look exactly, this is why I love Hypercharts. So they're like, okay, ad-supported revenue, what are you talking about? Well, we have a breakdown of Spotify's premium revenue, which is the bulk in blue. We can click X that out just to go to ad-supported revenue here and see that Spotify's ad-supported revenue, it was at $281 million in the quarter, by far a record and a huge acceleration. We saw a decrease in the sort of whole advertising market at the beginning of Rona, and now that's sort of bounced back in a really strong way. And so I would expect this to continue, especially as Spotify presses on, different type of content, more free podcasts, signing bigger people like Joe Rogan. That impact will have it there on the ad-supported side of the business. And then premium growing really nicely as well. But once again, a lot of this has been pressured by that Forex trend. So Spotify, I think, had a really good quarter. They broke over 2 billion euro run rate. 2.16 billion euros. They're getting close to a 10 billion revenue run rate, which for me at a $60 billion company looks extremely cheap. Additionally, one of my favorite parts of this quarter was Spotify's profitability, which appeared to be plateauing, had a nice breakout there. It was a strong quarter for gross margins. You had those advertising revenue bounce back. So we had a really strong gross margin quarter there, almost the strongest in history, and that contributed to it as well. So I think Spotify, it's on the home screen of my phone. It's one of my 4 favorite apps. I love it. I think there's a lot of potential for Spotify to do something like eventually allow us to invest in our favorite artists. I just think the entire music industry is ripe for disruption. They're still kind of playing this balancing act of the record labels and trying to pull away from the record labels and have their own service while relying on all that content is really tricky. But I think the power has shifted in the past couple of years from Spotify being at the whim of the labels to the labels being at the whim of Spotify. And if they can execute this pull away, much like Netflix did with their own original content, then I see Spotify as potentially being a multi-$100 billion company and having, multi-back potential from here. So I think Spotify is really cool. And just their mission of, empowering a billion, I think it's like empowering 1 million creators to connect with 1 billion fans or something. Like, I love that mission. So we'll see what happens with Spotify. Next one, let's go to Snapchat. This is going to be a funny one. Shout out to Turner Novak, who I've had on the channel a couple times. He's awesome at covering Snap. I love Snap. I bought 9 shares at 16 a share. So still hodling. Sorry, you can't see the Hypercharts. But yeah, so I switched to Hypercharts. They just reported today, Snapchat stock has been absolute monster. Up 266% in the past year. Snapchat since IPO here, we can take a look. They IPO'd, super hot company, had a lot of struggles, Instagram copying them right as they IPO. And then we sort of saw a pretty, steep, dramatic decline here in Snapchat down to $6 a share, $5 a share. I bought around here at $16 a share and have just been holding. Or I think I bought there. Maybe I bought this $16. Anyway, who knows? But they've really had an impressive turnaround. And so I think this is a really good example to show you that look at the equity price. So the equity price has soared, but this is because the fundamentals have turned around. We can see a clear inflection here in mid 2020, in late 2020 that showed like an explosion in growth. So let's go under the hood and look at the financials. What happened in that mid 2020? Well, what do we see? The Instagram stories hits here. Instagram's copying them. They're not making much money. And then all of a sudden they return to growth. And this quarter, wow, 265 million DAUs, up from 249 million, a huge addition of DAUs. So the platform, they shrugged off Instagram and the business has been crushing it. This is users. We'll get the financials. I want to hone in here on rest of world, see where the growth was. 99 million up from 87 million. Wow, huge growth in rest of world. This has got to be because the Android app improved, or I think that was a big part of it. Europe also growing, 74 up from 72. Let's take a look at North America. Ooh, not great in North America. I still think this is a weak part of the business, 92 million. Although 92 million average daily active users in the quarter, like, what is this? US, Canada, and Mexico. There's like 500 million people in that region and 92 million on average every day check the app. Like this is daily active users. That's really important to remember. So huge quarter for Snapchat in terms of engagement. Nothing, everything about Snapchat is about engagement. That's how they monetize. So epic quarter there. Look at the financials here. And I've often said like Snapchat, here's why I was bullish on Snapchat. Not only are you getting the effect where they grow users rapidly, so Snapchat makes $5 for every user and we're getting a lot more users, we're growing, but we're making more money per user. And this is a game-changing, sort of tailwind that led to Facebook being so profitable, is that these ARPU, average revenue per user of these social networks, starts out very low. And then as they do ad loads, as they get programmatic ads to increase the gross margin of those ads, as they build out the monetization to catch up to that engagement, you have a really ramping revenue per user system. So that's exactly what I think is happening for Snapchat and has happened. And that's why, I think I was out of the curve. And so is a lot of other kind of forward-thinking tech people, because it's like, okay, the ARPU numbers look like they suck, but if Snapchat can keep growing their users, this has huge, huge potential. And so that's exactly what happened. And look at the growth in users. And what's only more pronounced than that is the growth in revenue. So it's like it did the user growth and then accentuated with that ARPU bump. So the US still, out of the whole revenue of Snapchat, 911 million, 660 million is the US, 141 million from Europe, 110 million from rest of world. So even though the user distribution is pretty even, the revenue distribution is very lopsided. That's how that goes, because people just charge higher ads for US social media users. So Snapchat here, this was an incredibly breakout quarter financially for the company. As you can see, revenue, all-time record, 911 million. Gross profit there in the yellow, ramping significantly to 525 million. Operating loss, an all-time record small loss for Snapchat of only $97 million. A lot of this is stock comp, so they probably did a positive cash flow quarter as well. So this was a huge breakout. We can go to annual just to see, taking a step back out and look at what's happening with Snapchat here. Wow. I mean, trimming their losses every year, down to 862 million from 1.1 billion. Not great, but this is a growth company. That's really what you're betting on here. 2.5 billion in revenue, up from 1.7 billion in revenue. Gross profit, 1.3 billion, up from 819 million. Everything really headed in the right direction. Snapchat, though, $87 billion market cap for a $2.5 billion revenue. I mean, lots of growth priced in here, but the market's crazy, so I don't know what to think of that. But yeah, wow. And we can check out the growth rate here. Or this is actually another big trend that I wanted to show is gross margin. So Snapchat, if you're going to be an advertising business, this is when I beef with Snapchat when they IPO. It's like, you're going to be an advertising business, but you're telling me you have 30% gross margins. Like, this is not software. Like, Tesla's going to hit 30% gross margin. They make a car. And so, yeah, so Snapchat, 30% gross margin when they start, then bam, 48% gross margin. We're getting better. Then this year, 53%. So we're above that 50% mark. We're trending in the right direction. If we go quarterly, we can see that there was an even more all-time record here of 58%. So I think Snapchat's gross margin continues to climb, continues to hit hopefully mid 60% next year. And that would be absolutely phenomenal, because it's, I think the profitability is going to improve. And you look at the operating margin, Snapchat extremely unprofitable, negative 60%, negative 50%. Then this quarter, only negative 11% operating margins. So we're literally seeing this Snapchat business model transform towards profitability before our eyes. And this massive progress on the fundamentals is exactly why we're seeing such progress in terms of the equity price. And so I think that's super important to just drive home the point that, amazing fundamentals will lead the stock to go up in the long run. So that's my take on Snapchat. Actually, Snapchat puts out an amazing investor deck every single time. So I want to click on their investor relations site just so we can show you, like, look at this. Woo! Do you see that animation? 265 million people, 200 million DAUs engaging with augmented reality every day, $1 trillion in direct spending power of Gen Z and millennials, 5 billion snaps created every day. I don't use Snap, so I feel like I don't know, but it's a powerhouse. So this is Snap's investor presentation. As you can see, found it right from Hypercharts. 62% was the revenue number there. They have all these business highlights as well. This is pretty epic. 90% of the US Gen Z population watch shows and publish their content in Q4. So Snap's pitch here is, you're old, you might not know who's on Snap or what's going on Snap, but all the kids are using Snap. Gen Z is on Snapchat, and they are the future of everything. And it's just going to take a while for them to really monetize and catch up to that audience. But 90% of Gen Z being on Snapchat, there as many young people are on Snap as on Instagram almost, or maybe even more. And I think that is kind of underappreciated. But what they're doing for the augmented reality seems to be a big piece. And they really highlight that in this investor deck here. 200 million people engaging with it. Our cartoon lens, powered by the real-time machine learning, generated 1 billion in impressions in its first 3 days of launch. So lots of exciting stuff here going on the AR front for Snapchat. Okay, now let's have some fun and go to some big tech earnings here. I want to show you Amazon. So I made a video about Jeff Bezos stepping down, but let's look at what happened in the business, because the business here, Amazon, probably out of all businesses, it sounds so simple, but like, we order food online now. We order even more stuff than we were online. Online retail sales were like 10% of overall consumer spending or something like that. Really low when you think about the internet. You'd be like, man, it should be higher than 10%. But now it's skyrocketed. So of course, Amazon been the major beneficiary of that. Look at this Q4. It was just out of control. 126 billion in revenue. Let's break down how that these are how Amazon discloses it. Let's start with online stores to see what's up with that. Their bread and butter. Oh my God. 45.6 billion to 66.4 billion. So huge growth in just their bread and butter business. Third-party sellers. This is fulfilled by Amazon but not sold on Amazon. Kind of goes along with that online store business. And this was a breakout as well. More people buying stuff online. Physical stores, this will be interesting. Wow, they had an uptick from Q3, but physical stores, Whole Foods, Amazon Books, Amazon 4-star, I guess in decline. But it's funny because Amazon finally gave up on online everything and made this push into brick and mortar, and then Rona happened. So that's why this is declining. Subscription, I guess this is Prime services. Look at that. Wow, beautiful chart there from that subscription business. AWS has been a behemoth, and I think a lot of this success, 12.74 billion in revenue, the most profitable piece of Amazon business. Andy Jassy, the guy who started AWS, is now the CEO of Amazon, and it's because he was putting up numbers like this that they trust him with the whole company. Other revenue, this is mostly advertising, I believe. Wow, huge growth there as well to 8 billion. So, they do geography breakdown as well. I always think this is interesting of North America is such a big piece of Amazon's sales that they have a lot of international growth to go. And as you can see, wow, huge quarter for the international business. So it looks like that business is accelerating. So Amazon is crushing it. I'm not going to lie. And for the company that was famous for never making a profit, for what it's worth, they have started crushing out a huge amount of profits. Wow, gross profit. Let's look at operating income. So Amazon's operating income, you can't really say they're not profitable anymore. They've been profitable for 3 years in a row here, making $7 billion last quarter. Still, does that justify the $1.7 trillion price? I don't know, but $1.7 billion last quarter, or 6.7, sorry. What's that? 30 billion, 28 billion, 25 billion run rate of earnings on a 1.7 trillion. What are we looking at? 60 times price earnings ratio, but he's like almost doubled. So I don't know. I think a 1.5 times earnings yield for Amazon is fine, but yeah, it's just an unbelievably high quality business. And I think when you look at the growth too, Amazon's revenue growth, I guess it kind of started shrinking there, when Rona was done. It was in the teens. Amazon going below 20% growth, growing 17% in 2019, 19%, 24%, and 21%. And then as the Rona picks up, the entire growth rate of the company accelerates there, 44% last quarter. So to still be doing over 100 billion in revenue, growing at 44%, I mean, this is Amazon's still a growth stock. I think Amazon's going to 5 trill in the long run. Okay, now let's go to Apple. I just kind of I'm curious to see what's up with Apple, because I know they had, wow, look at that quarter for Apple, just a gangbuster quarter. The iPhone is their workhorse here, 65 billion in revenue. Actually not that much better than the fiscal Q1 2018 iPhone numbers, but let's see what happened here. iPad looking, wow, who would have thought iPad would have bounced back? Yeah, right? Mac, solid quarter from Mac, never going away. Services, this is really the growth engine of Apple. Health, services, App Store, all that sort of stuff, doing really well. And I want to say AirPods are in this other revenue segment. So Apple Watch and AirPods contributing to massive growth here. They're probably gonna have to start segmenting out like AR products like Apple Watch and AirPods as a new revenue line. That'll be really fascinating. I also just saw they put out there's a rumor about this new headset. I don't know if it'll be on their $3,000 headset, AR headset, which is apparently going to come out. So that sounds very, very interesting. Yeah, I don't know. I'm just trying that. I haven't read this version of the article. I know the actual article is from The Information by Alex Heath. So I'm going to have him on the show Monday to talk about this. But there was a rumor that Apple has more than a dozen cameras, dual 8K displays, $3,000 price tag on this VR AR headset. The Information reported this and actually released a picture. So this is the official article with the scoop about Apple's mixed reality headset, something they've been working on for years. Really fascinating. I can't wait to dive more into this, but I think Apple needs to innovate. They need to grow. And what's going to come in between, the cell phone and Neuralink? It's these smart glasses. And so a lot of people think that's something they're working on. That and the car, when you think about Apple, they're so big, they're so not innovative. I mean, Apple has so many resources, so many top secret projects. I think the electric car, and I don't know, I think that's more of a moonshot. To me, that seems way less out of their wheelhouse. You got to be vertically integrated. You need the battery tech, competing with Tesla, versus this headset thing, which feels like an evolution of the smartphone, feels like a lot of the same kind of, the AirPods are wearable, the watch is wearable. To me, the headset seems a lot more in Apple's wheelhouse. And I think this is going to be, if I was an Apple shareholder, which I'm not, I think Apple doesn't have a lot of innovation priced in, but it has some, and most of it comes from this headset. And at what point do you start to look at the iPhone as sort of a legacy business, as something that's waiting to be disrupted versus this amazing product? I think we're already kind of there. So that's Apple, but super profitable. Let's run back to the financials, see what was up with that. Wow. Oh my God. Look at that profit right there. Record profit, 33 billion in a single quarter. So, Apple making more in a quarter than Amazon's going to make in a whole year, yet Apple only worth 60% more or whatever, or like 40% more. So 5 times as profitable, but only valued 40% more than Amazon. That's an interesting dichotomy about what the market's telling you about the growth rate there. But that's because Apple's growth, actually 21% growth last quarter is not bad. But before that, had been in the single digits, if not shrinking. So I think this was a huge quarter in many ways for Apple's growth rate to resume. I think that's really impressive and says a lot. So, big tech is crushing it. Honestly, a phenomenal quarter for Apple and Amazon and all of these companies. I mean, I try and only follow companies that I love, like Snap, Peloton, Spotify, Apple, Amazon, bullish on all those companies. But yeah, kind of wanted to run through earnings with y'all. If you have any questions, please leave them below. Wanted to give you my rundown on all of these companies. I think, breakout quarter for Spotify with the gross profit, Peloton. Probably the most red hot quarter was from Peloton. I also have another scheme about earnings is Square stock. Actually, I want to end on this. Square stock, which hasn't reported yet, but will report. One thing that's really fascinating about Square is look at the quarter that Square had last quarter. First of all, Cash App just exploding. We added this. Shout out to Mo for adding this. He's the co-founder of HyperCharts. And we added these Cash App monthly active users. So you can see that, 33 million people using Cash App monthly active users. This is a huge asset for Square. And here's the Bitcoin revenue. So Square's Bitcoin revenue was absolutely off the charts last quarter, explosive Bitcoin revenue. And what that led to, and it did increase the revenue of the whole company, but I think a lot of that wasn't fair because it was really low margin Bitcoin revenue. But let's adjust out and just look at the gross profit. And from there, you can see that this was a total game changer, a total new trajectory for the gross profit and profitability of Square because of Bitcoin. And so, but then I think when you go and look at what happened to Bitcoin in Q4, you see that Bitcoin was skyrocketing in Q4. So I think Square is on the cusp of announcing, I mean, look at what Bitcoin did in Q4. This is the start of Q4. This is the end of Q4. I mean, Bitcoin was just mooning all of Q4. So my theory is Square, which hasn't announced its quarter yet, Square is on the cusp of announcing an absolutely monster quarter in terms of Bitcoin revenue. And so I think this will be a breakout quarter for Square. I think they're going to have another one of these huge Bitcoin candlesticks. And that's going to, that this entire gross profit trajectory is going to continue as Cash App and Bitcoin really become a huge dominant part of the business. So very bullish on Square earnings. Got a lot of FOMO because I don't own Square. But anyway, this is Hyperchange Earnings Bonanza. Would love to know what you think in the comments below. A dark kind of grade A at Seattle, but I thought it was perfect to scheme with y'all. So really appreciate you tuning in. Subscribe if you haven't already. I have some epic, I might even drop another video tonight about Tesla Model 2 in China. So definitely stay tuned for that. Anyway, see y'all next time. Peace. Oh, huge shout out to Hypercharts, by the way. I put the link below. If you want to follow along to all of this, hypercharts.co. I have a premium subscription. That's why I have some more features, but you can play around with the free version. Still has all this info. Hypercharts.co is like an amazing resource to check out and follow all your favorite companies' earnings. And you can follow along all the charts I just showed. Anyway, see y'all next time. Love y'all. Peace.